James Turk, you came directly here to Munich to the Precious Metal and Raw Materials Fair from the Princeton University in New Jersey. What have you done there?
Yes, there was a conference that was co-sponsored by Princeton University, the Witherspoon Institute, and the American Principles Project. And the purpose of the conference was to look at the problems with the US dollar today and perhaps come up with some solutions for monetary reform. I think there's a wide acceptance within the United States that the country is heading in the wrong direction. And as a consequence of that, there's a need for monetary reform. The problems with the dollar are quite apparent. The growth in the federal debt is quite apparent. And there needs to be some change. So the purpose of the conference was to have an open discussion with possible recommendations as to how we return. There were a variety of different opinions and points of view. My recommendation was really quite simple. We have to go back to what the framers of the Constitution put into the Constitution and just follow what they recommended based on their own experience. The first currency of America was the Continental, and it collapsed after the War of Independence. It collapsed because too much money was being spent and turned into currency. Too much money was being spent by the government and turned into currency, and it basically destroyed the currency. So one of the reasons why the framers created what says in the preamble of the Constitution, a more perfect union, was to create a common market with a common currency. And that was done through the Constitution by making the dollar the unit of account for commerce in the United States. And it was confirmed in the Coinage Act of 1792, which was one of the... It was confirmed by the Coinage Act of 1792, which was one of the first acts of the new Congress. And basically the Constitution says that the money of the United States shall be, gold or silver coin. Congress was given the power to coin gold or silver. Was not given the power to print. Mm-hmm. It was given the power to coin and regulate the value thereof. What the regulate the value thereof meant was that Congress could fix the gold-silver ratio to determine whether the U.S. was on a gold standard or on a silver standard. And initially it was on a silver standard from 1792 until 1900. It's the silver dollar. Mm-hmm. And then from 1900 until the gold standard was abandoned in 1971, the U.S. was on a gold standard. So my view is that in order to get monetary reform in the United States, politicians have to read the Constitution and follow the requirements of the Constitution and what the framers of the Constitution put into it, that gold and silver coin should be the money of the United States.
Yeah, and do the other attendees like your point of view?
A number of them did, yes. But there are others that have this view that rather than having an external discipline imposed by precious metals, that money can be managed by human beings and by politicians. But history shows that money cannot be managed by politicians effectively. It's always created to excess. There's always too much money created, and that's what's happening in the U.S. at the moment. Politicians are spending and spending and spending. That's forcing the U.S. government to borrow. It's borrowing more money than the market is willing to lend to it, with the consequence that the central bank has to step in and buy that government debt and turn it into currency to give the dollars to the Congress to meet their spending aspirations. They have a fancy name for it. They call it quantitative easing, but the real name for it is money printing, and that debases the currency. We can see with the gold price rising, the silver price rising, the message from the market is that the dollar is on the wrong road. It's on the road to debasement, and precious metal prices, rising commodity prices. All of these things are suggestions that the dollar's purchasing power is being destroyed.
Yeah, and you see your country on the road to hyperinflation?
Yes, I do. I've actually been making this point now for a year and a half, a couple of years. If we don't get off this road, we are going to end up with hyperinflation, and I think we're getting pretty close to the cliff. there was a lot of similarity between what's happening in the U.S. and what's happened with hyperinflation in other countries around the world where hyperinflation appeared. It manifests itself in different ways. For example, in Weimar Germany, the hyperinflation was a cash currency hyperinflation. In Argentina in 1991, the hyperinflation was a deposit currency hyperinflation. It manifests in different ways depending on the nature of the banking system and how commerce is conducted in the country. In Germany, Weimar Germany, most commerce was conducted by paper, banknotes. In Argentina, most commerce was conducted by through the banking system with checks and wire transfers and plastic cards. But regardless how hyperinflation manifests itself, it always has one cause. It's government spending too much money, forcing it to borrow more money than the market is willing to lend to it, and the central bank has to step in and turn that government debt into currency. In the Weimar Republic, they ran the printing press. In Argentina, they ran the computers, to add bookkeeping units of account. Yeah. But basically, it was the same result: destruction of the currency through hyperinflation because of too much government spending, and that's clearly what's happening now in the United States.
Yeah. Do you see the danger of a bubble in the bond market?
Yeah, the bond market is in a bubble. People talk about. There's talk about gold being in a bubble.
Yeah.
Gold is definitely not in a bubble. There are actually two bubbles. The bond market is a bubble, and the dollar is a bubble. People are ignoring the thousands of years of history of gold as currency, and they're saying that the past 40 years, where we're having fiat currency, in other words, currency backed by nothing except government promise, that's money. But in reality, fiat currency is just a money substitute that's been circulating in place of gold. But I think what will happen in the not-too-distant future is gold's going to reestablish itself as the international money, which is what its traditional and historical role has always been, particularly for use in cross-border commerce.
Yeah. Would you say that there is actually a battle between the dollar and gold now for the lead currency in the world?
Yeah, gold is the only natural competitor to the dollar. And that's part of the reason why governments have been working to manipulate or to cap the price of gold. By capping the price of gold, it makes the dollar look better than it really is. But what's happened over this past decade, gold has been rising because it's so undervalued that the market is moving toward it increasingly. The power of the market is greater than the power of any government or group of governments working together. So what we're seeing now is, I think, the market is really starting to express itself that gold is very undervalued and that it's going to be going much higher. And the gold cartel, which has been capping the gold price, I think is now breaking up. There's similarities back to the 1960s and the early 1970s. For a long time, the gold price was capped at $35 in the 1960s, but everybody knew that $35 were not worth 1 ounce of gold. In other words, an ounce of gold was worth more than $35. Now, what was happening is the gold price was capped because the U.S. Government was emptying Fort Knox, and they sold 10,000 tons of gold at $35 an ounce to try to convince the market that that was a fair price. But the market knew better. Eventually, the government threw in the towel and had to stop emptying Fort Knox, and the gold price rose as a consequence. It remained so undervalued for so long that it went from $35 to $200 basically without stopping. The similarity today is that the U.S. government is in there capping the gold price, but they're doing it surreptitiously. Back in the 60s, they did it by emptying Fort Knox. This time they do it through phony accounting. If you look at central bank balance sheets, gold in the vault and gold out on loan is carried as one line item, which is like saying cash and accounts receivable are the same thing, which is, of course, nonsense, when looking at generally accepted accounting principles. But central banks, think they can get away with everything, including phony accounting, and as a consequence, we don't really know how much gold they have in the vault and how much gold has been used during their intervention and capping efforts. But the point is that just like the market finally broke free in the early 1970s, the market is again breaking free. And when we went from $35, to $200 in the 1970s, it was basically a straight shot and happened in 3 years. And when we finally broke over $1,000 several months ago, It's been my view that we're just going to keep on going higher because the pressure is now being released, and it's going to be expressed in a higher price. There's another similarity. When the Dow Jones Industrial Average finally broke above 1,000 in 1983, it just kept going and going and going, despite the fact that a lot of people were saying the Dow was overvalued at 1,100, Dow was overvalued at 1,200, but it went all the way up to 3,600 before it finally corrected. And I think that we could see a similar move here in gold over the next year or two. I think it's going to just keep going and going before there's any kind of serious correction, because people are waking up to the fact that the dollar has been badly debased. Gold is extremely undervalued. Even though the price is high, on a relative value basis, gold today is like buying gold at $300 in 1985, because the dollar has been so badly debased over this intervening period of time.
Yeah. Are you a strong supporter of Gartner's effort to have an audit of the American gold reserves?
Yes, I am. Ron Paul is proposing legislation. I think an audit of the American gold reserve makes sense. There's no reason for secrecy. There's no reason, in this day and age for anything but transparency. I find it offensive that central banks think they can operate behind closed doors and dictate things without people, knowing the consequences of their actions. I'm definitely in favor of transparency of all sorts. And as a consequence, I think an audit of the gold reserve is long overdue, and I would definitely support that effort.
Yeah. As you already mentioned, gold is not in a bubble. Can you give us 3 reasons why not?
Yeah, gold is cheap. It's undervalued. And I guess the third reason, which is maybe the most important, is that it has usefulness. When you own gold, it's money that's not based on someone's promise. And as a consequence, that means gold is the only kind of money that's not dependent on banks or central banks or governments. It does not have counterparty risk. In other words, you don't have to worry about someone else's promise. It's not a financial asset, it's a tangible asset, and that's one of gold's unique attributes. And that attribute that there is no counterparty risk is increasingly important when you're in a financial crisis. This financial crisis that we've been in since even before the Lehman Brothers collapse, it goes back maybe to Northern Rock collapse in the UK. We still have 3 to 5 more years to go before this resolves itself. Bank balance sheets are way too high in terms of leverage. There's still a lot of debt out there that has to be either repaid or defaulted upon. And so in this kind of environment, you really don't want to be at, you don't want your bedrock asset, your liquidity, to be at risk. And as a consequence, owning gold that does not have counterparty risk, owning physical gold, not paper gold, physical gold. If you own physical gold, you don't have counterparty risk, and I think that's increasingly important in this environment. So that would probably be my third reason.
Yeah.